JPMorgan Chase is in the news again this week, and they're starting it off with a bang. It's because they won the bid to take over First Republic Bank. Now, I'm going to tell you why this can be seen as a good thing, but it can also be seen as a bad thing. And in this video, I'm going to explain why. I'm also going to explain why this happened and why it happened so quickly. Hi, I'm Nadia, one half of the Wealth Twins, where we teach you how to live a life of financial freedom by helping you increase your financial literacy and your skills around investing. So let's jump into it. Last week, the Fed had asked several banks to offer a bid in order to take over First Republic Bank. This happened because First Republic Bank gave their quarterly report last week, and it was dismal. It turned out that the bank had lost over $100 billion in deposits, and they were cutting about 25% of their workforce. Last week, the Fed initiated an auction and asked several banks to put in a bid to take over all or part of First Republic Bank. Several of the banks asked to give a bid last week were PNC Bank, JPMorgan Chase, US Bank Corp, Citizens Bank, and Bank of America. They were all asked to get a standing bid by Sunday night in order to take over all or part of First Republic Bank's assets. As it would have it, JPMorgan Chase won the bid, which is not surprising because it's probably the largest bank that gave a bid during that auction, and it had the capacity to be able to take on a lot more of the assets of First Republic Bank. JPMorgan Chase agreed to pay a little over $10 billion in order to acquire $173 billion in loans, $30 billion in securities, and over $92 billion in deposits from First Republic. In the agreement, the Fed also agreed to take on a percentage of the losses on those loans, which is about 80% of the losses. They also agreed to give JPMorgan Chase $50 billion in financing. Within the deal, JPMorgan Chase also does not have to take on any of the corporate debt from First Republic or any of the preferred stock. Right now, JPMorgan Chase and some analysts are saying that this is basically a wash when it comes to the financial gain that JPMorgan Chase is getting from this deal. But in the long run, this is a great deal for JPMorgan Chase. For one, they look like they're a strong bank that's willing to step up anytime they're needed to help ensure the confidence in the U.S. banking sector. And they also, at the same time, increase the number of deposits they have on their books, and at the same time, they bring in new clients for their wealth management business. This is an area that JPMorgan Chase wanted to increase in the future anyway. So this gives them the coveted client base of First Republic Bank because most of their clients were wealthy individuals who would fit nicely into JPMorgan Chase's wealth management division. Now, the reason why I say this was a good deal was because this would have set off a chain of events if someone didn't step in and help the Fed take over First Republic Bank. First Republic Bank was the 14th largest bank in the U.S., and it is the second largest bank failure in the U.S. This is second only to the Washington Mutual or WAMU failure. And I'll give you 10 points to tell me who took over WAMU after it failed. Well, I'll just tell you right now, it was JPMorgan Chase. In order to do this deal, JPMorgan Chase had to get special permission because it already has 10% of the deposits in the U.S. With this deal, it now increases that probably around 3%, so they'll now have 13% of the deposits in the U.S. This bank was too big to fail before, now it's even bigger, and I think this is kind of dangerous. I find it a little concerning that the Fed gave JP Morgan special permission to do this deal and not break up the assets among the other banks who submitted bids. JPMorgan Chase is a behemoth. Having a bank this big is a concern, and all they're doing is going bigger and bigger by snapping up these smaller banks. Now, if you weren't aware of why this went down so quickly, I'm going to give you a quick timeline of what happened. In early March, First Republic got caught up in the whole banking crisis of the smaller regional banks, and this was primarily because First Republic has a very specific client base, and a lot of those clients had over $250,000 in deposits, and over $250,000 is not insured by the FDIC. In addition to having a lot of accounts that had over $250,000 in deposits, they had a lot of jumbo mortgages on their books. If you're not aware of what a jumbo mortgage is a loan that's greater than $726,000 to about $1.1 million, depending on what state you live in. These are loans for single family homes. A lot of the wealthy families took out mortgages because the rates were so low. These loans have lost value because interest rates have risen a lot in the short term, and these loans were long-term loans that were made at such low rates. The Fed is in the process of raising interest rates, so if First Republic wanted to sell these loans, they would definitely take a loss on them. And that put the bank under a microscope and in the crosshairs of people saying, you know what, this is too risky, I'm moving my money out of this bank, and a lot of the depositors left in droves. Now, the Fed had to do an auction for First Republic Bank because things were moving so quickly, and unlike the other times, the Fed could not step in and say, we guarantee all the deposits over $250,000. At this point, they had to do a little smoother process. They had some time, unlike what they did with SVB and Signature, and they asked other banks to come in and give a bid. It was not possible for the Fed to be able to cover all these deposits, so they took a different route. Now, this is also good publicity for JPMorgan Chase because they've been suffering a couple of hits in the news lately due to two cases. One is a case against the Frank founder, who they did a deal with for $175 million to buy the financial aid consultancy. And it turns out that it basically was a scam. So they didn't do their due diligence enough before they went into this deal. On top of that, there are two other lawsuits against them, which are related to Jeffrey Epstein. They're being sued by the survivors of Jeffrey Epstein because they were Jeffrey Epstein's private banking partner, and that Jeffrey Epstein was benefiting from sex trafficking, and they knew about it and they profited off of it, and they kept him as a client. Now, related to that, JPMorgan Chase is suing their ex-private banking chief, Jess Staley, because they're saying, look, if we take any damages from the Jeffrey Epstein trial, he should be on the hook for a percentage of our losses because he knew more than what he told us about, and we knew nothing about it, and he had a private relationship with Jeffrey Epstein. It was his fault. They are also being sued by the government of the U.S. Virgin Islands because of the relationship with Jeffrey Epstein. So none of these cases are good for JPMorgan Chase. So taking over a bank and looking like the savior and stepping in as the big guy to take over the bank is good news for the bank because they've been suffering some blows lately. Now, what's next for First Republic? First Republic will be getting kicked off the S&P 500, and the company that most people think will take its place is Blackstone. There have been some changes in the requirements in order to be able to join the S&P 500, and they were changed last month. So now Blackstone is the top contender for taking the place of First Republic on the S&P 500. Now, in regards to customers, First Republic customers can still take out their money, use First Republic ATMs, and still bank as usual. Although if they walked into a First Republic branch today, there's 84 of those branches, they most likely would have had a Chase logo on those branches. Now, I don't know how that was possible, but whoever made those signs on a Sunday night to have them ready for a Monday, that's incredible. And it's probably the same people who get the names ready for the Super Bowl winners of Super Bowls if it happens late at night. First Republic customers will not become Chase customers overnight. This is most likely like a merger, so it takes months, if not at least a year or two, in order for a merger to really be done. There are a lot of projects that need to be kicked off to make sure that everything goes smoothly. You have to make sure that the integration of the systems with First Republic can integrate properly with Chase systems. You have to go through the process of transferring customers over. You have to be able to manage the new assets that are coming over too. So it's a huge process. There is a lot that goes on behind the scene before the customer is even notified about becoming a new Chase customer. Now, if a First Republic customer does choose to leave First Republic now, they can break some of their accounts right now without any prepayment penalties or anything like that. So I'm thinking maybe if you have a CD or you want to change your loan or something, maybe you can break that without any penalties. Now, for the preferred stockholders and the corporate debt holders, it remains to be seen what happens with those guys because this deal was done with depositors in mind and not shareholders or debt holders of First Republic Bank. So it remains to be seen what's going to happen with those guys. But I doubt they're going to be made whole. Now, this is going to be a very busy week and a very busy month because coming up soon, the Fed is going to have another meeting where they're going to decide if they're going to continue to raise interest rates to fight inflation. Now, chances are they're going to continue to raise rates, but a lot of people are concerned because each time they're raising these rates, these regional banks are failing. I personally think that the Fed is going to continue to raise rates because they're saying, look, what's happening in these smaller banks are not indicative of the overall economy of the U.S. and the overall banking sector. So these are just one-off events. Hopefully that's true, but it remains to be seen. Now, if you want to hear more about Chase and the deposits, if you're a customer, why don't you check out this video here where I give my thoughts on what Chase pays to their depositors and how it could possibly be improved in the future and give you some alternatives. And remember, if you found value in this video, please subscribe to the channel because we would love to have you as part of our community.